Hi, Andrew from the Investor's Way here, and welcome to day 12 of my 30-day video challenge, where I'm answering your questions about money and investing and hoping that these answers are helping you to get started in your path to financial freedom. So today's question comes from Lexi, and she says that her and her family are considering investing locally versus internationally, and are there any things that they should be looking out for? So again, this is a topic of great complexity, but I think there's two key things that I would like to alert Lexi to as part of her decision making when it comes to investing. And those two things are exchange rates and local laws. So the first thing you need to understand is if you are going to invest internationally, you're not only exposed to the gains and losses of your actual investment, but you're also exposed to the fluctuations in exchange rates. So if you're having to invest in a different currency, which is highly likely if you're investing internationally, then you add another layer of complexity in that you'll need to take a position of some sort as to what you think is going to happen with exchange rates with the country that you are converting your Aussie dollars or your US dollars or whatever it might be that you're investing in into the currency of the location you're planning to invest in. And the second thing that I mentioned is local laws. So whether it's properties or stocks or whatever, there's going to be some local rules that you're going to need to be aware of to make sure that you don't fall foul of local restrictions or rules or whatever it might be that could impede your ability to either move that investment, sell that investment, or even cash in on the gains of that investment. So you really need to spend some time to know what the local laws are so that you know before you invest your money what it is that you need to do and how it is that you'll be able to exit that investment at the time, or if the time comes that you choose to move your money out of that investment. So really crucial that you understand the exchange rates and also the local rules of that location. So when it comes to choosing between locally or internationally, there's just a couple of additional layers of complexity and therefore risk that you need to consider before you start putting money into those into another country. If you're just starting out, I would always suggest that you start locally and work your way up and get some investments building locally so that you can get the cash flows relatively easily, and they can start helping you to accumulate enough cash flow to cover your costs locally before you think about going internationally. Now, one final thing I'll add in, just as a bit of a bonus tip, is that if you're looking to invest in stocks internationally, you can actually do that locally. So there are now, I think I've mentioned them already in this video series, exchange traded funds, and if you wanted to invest in an international exchange, you can actually do it locally through an exchange traded fund. So that might be a simpler way to get involved. Now, the only thing to point out is you still are exposed to exchange rate variations. You'll be making the investment in local dollars, which is great, but the gains and losses of that ETF will be exposed to international fluctuations despite your investment being locally based. So it's still there, but managed by somebody else for you via the ETF, and is a good way to get started in international stock investing if that's what you're looking to do. So I hope that helps, Lexi. If not, feel free to leave a comment below, and we can revisit this question in a future video. But for now, don't forget to like the video, share it with your friends. As I've been saying, it's really good if we can get more and more people exposed to this information so that we can help them with their financial freedom journey as well. So like and share, and I'm Andrew from the Investor's Way. I'm dedicated to your wealth, and I look forward to seeing you tomorrow.